Hey, it's the Brian and Kendra Show. Thanks for listening. We're here to give you some valuable tips, practical tips, valuable insights. And we just went through it. I still missed it.
I mean, whatever you want it to be, boss. I think
it's
you
the Kendra Show. I'm going to stand over here.
So it's the Kendra and Brian Show.
Yes.
Okay, this is my favorite show. I'm so excited.
Ah, yeah. That's why I'm all jumbled up.
I know. Okay, Connie, I don't know if you know this. So, because I'm not sure how much I really shared with you whenever I was texting you, and you know I don't call, I text him. So here we are. I had brought this to Brian. I said, I want to talk about FICO scores versus just the general term of credit scores. Here's the information. I want to focus. And he goes, awesome, call Connie. Like, I'm not exaggerating. Yeah. It was like, I mean, he was like a little kid in a candy store.
Thank you.
And I said, you think she'll do
raised
that?
us.
For real.
You know, I was thinking about that. I thought,
yes. Do you remember back?
Of all the people to do this with, you two. But the thing is, you wanted it. You wanted to know it. You wanted to understand it. Mm-hmm. And so many people is like, oh, just do it and go on, you know. But you want to understand it.
Yes.
And that's good. Yeah.
So I remember like back in, I don't know, probably 2008 or 9, I guess, right after I'd moved to Woodward. So I moved back to Woodward, and I was so new in real estate. Like, I had done property management and understood contracts. I understood, but I didn't know the practical side. I didn't know how to apply it all. But I knew nothing about loans. And you weren't with Bank 7 back then. This was so Connie Rowland, formerly with Bank 7. Right. I mean, she raised Bank 7.
Yes.
Right? You told Doug you shared all of your knowledge and insight with Doug.
Well, I did, and he took it pretty difficult in the beginning, but then he realized that he's going to have to listen, and he did really good. He's very knowledgeable now.
He is. You did a really great job with Doug in teaching him about the mortgage department. But you began the mortgage department at Bank 7.
I did.
What was that? Probably around 2010.
Yes. Mm-hmm.
So
wow. Then you was mid-first, and then you was
Bank 7. She was before mid.
I was at mid-first.
Bank
before
7,
Bank 7.
mid-first, and then prior to that was...
Oh, yes. You were going backward. My apologies.
Country
Home Loans.
Yes.
And then, were you in the building on 9th Street on Oklahoma?
On Oklahoma, yes.
Okay, that's what I thought.
And then
that's
moved out
we
to the
met.
K101 Center, yeah.
Okay.
Yeah.
I remember going through the back door.
Yes,
Oh.
yes. That was where I started here.
Yeah.
The backdoor loans, huh?
Yeah. So,
Funny.
Sounds like you're part of the mob or something.
Okay.
Oh, she's not going to talk about that. Okay. Anyway, I remember very, very clearly I had called you on a customer, and you were with Country Home Loans back then. And so you had shared, okay, here's what I'm looking at. Here's the things that are problems. This is what I've shared with the buyer. This is what the buyer needs to do. They're not approvable yet, but I've given them instruction. Check on them in 6 months. And I did. Like, I put it on my calendar, and in 6 months it came up. And so I called, and, hey, this is Kendra. Da, 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 da. And they still weren't ready, because unfortunately not everyone can really use the tools that we give them.
Right.
But I saw over and over again, from that point on, I would see over and over again that you would share tools and you would share advice, and then people would use it. And even to the point that I came in and sat down with you whenever I was about to go through a divorce and said, Connie, I don't really know what I'm doing. And thank you. Yeah, you do. But you also shared a little more. Now, don't forget this. Now, think about this. Now, you want to pay attention to this as you move forward financially. And I just always felt like the way that you cared for customers is what helped them to do well with their credit scores and to do well with getting their loans. And so I was so excited that you're like, yeah, I will. I thought that was way too easy.
Well, I love helping people. You know, in any aspect of life, I love helping people. And credit just seemed to be one of the things that people truly do not understand how to get there.
No.
And so they need help. You can pick up your phone, you can go online, you can read all of this information, but still it's so difficult until you see it in black and white.
Right.
It really is.
And I think even still, because sometimes we get just a little bit of knowledge, and I think it skews the whole picture because we just have a little snippet of what we think we know. Mm-hmm. So we wanted to talk about credit scores with you today. and then as I was talking to Brian, talking to Nathan, and texting you, I thought, well, there's so much even more. So we might even stop in the middle and hit a point and then come back to the big credit conversation.
Okay.
So I think the first thing, and I don't know if you have something different on your list, you're welcome to say, no, I want to go here first.
No, that's okay.
But I wanted to talk about what a FICO score is compared to. So you had told me a long time ago to start. Actually, I think you said this in a general meeting, and I took it to heart. I had started looking at Credit Karma for myself, just to keep on top of what my finances looked like, what my credit score was. And I found it very interesting because Credit Karma will even tell me, if you do this, then your credit score will increase, or you're this. And sometimes I feel like it's trying too hard to sell me more debt.
Mm-hmm.
I don't like it, but I felt like it was so helpful. But that's not my real credit score.
No.
It's like my real credit score, but it's not my real credit score. I don't know. So tell us, what does it all mean?
Okay, so on a FICO score, there are the three bureaus, Equifax, TransUnion, and Experian. And so a FICO will have all three credit scores. And the FICO score is, as far as I know, that's the only score that I've ever pulled for mortgage history.
Okay.
Now, lenders may only pull one bureau, and it may be just the TransUnion here in Woodward, for a car loan or just a personal loan. They may not want all three because, of course, it gets expensive the more credit that you pull. But the whole thing about the FICO score, and of course, there are many credit modules out there. There are many credit repositories out there. So the one that we used at Bank 7 was Kroll Factual Data. So the one that a lot of people use will be that one. But there are many. So the FICO, all of those credit modules should be very similar as far as the credit score comes up with. But when you use Credit Karma, now you're looking at that your credit only. You're not doing a soft pull. It's not an inquiry. So It's not going to draw that down to where it needs to be for mortgage history. But what I have read about Credit Karma, and I don't use Credit Karma. I do have a credit card that tells me what my credit score is. And it also helps you, it gives you all this information that Credit Karma will give you. But Credit Karma uses Vantage Score Solutions.
Right.
And they only use two bureaus. They use TransUnion and Equifax. Okay, so you're not getting all three.
Right.
So let's say that your FICO score is 750, 730, and 720. That's the three bureaus. But with Credit Karma, you might only have a 730 and a 720. So you're missing out by having a full picture with just Credit Karma. You really need someone, and I think we're going to talk about soft pulls and hard pulls, but you really need someone to give you what your credit score is, your actual credit score that you're going to be working with them for a mortgage loan.
I think one of the concerns with only relying on Credit Karma and thinking this is it is sometimes Credit Karma or sources like that give us a better view of our credit than what the FICO score will be. So like my credit score, whenever I got my home loan, my credit score was higher with Credit Karma than when they pulled the FICO.
Yes.
And so I think that's the concern, and that's why we really want everyone to understand. We certainly value looking at the credit scores on your credit card or wherever you're pulling that from, wherever you're looking just for your personal information. Like you need to know and you want to know so you can see it growing or you can see it decreasing and go, oh my gosh, what do I do now?
Yes.
You need to have an idea, and just so that if something crazy happens, you'll be the first to see, oh, somebody just used my credit.
Right.
And so
Absolutely.
you can, but it's not the thing that the bank is going to use.
Right.
That's what we want people to see, I think, right?
Yes. That is, like you say, with your credit card or with Credit Karma or any of those other companies that you can pull credit from. And of course, if you can go to annualcreditreport.com and get one free credit report each year from each one of the bureaus, you can also pay to get a credit score. If you have, depending on where you are in your life, whether you're wanting to buy a home tomorrow or 6 months from now or whatever, I would definitely get the free report. And then later, as I worked on my credit, I could get the credit score to see what I'm really
Right.
working with. But those are going to give you a more accurate. However, you're looking at your credit. It's not an inquiry. It's not for mortgage. Mortgage history is the most stringent pull that you can pull. So if they pull a TransUnion for a car loan, that score may be higher than if someone only pulls your TransUnion for a mortgage history because it is the most stringent.
So, okay, we're talking about pools, mortgage pool, hard pool, soft pool. So tell us what that verbiage means, and because it affects you differently. So a pool can decrease your credit score.
It does, yes.
So tell us about that.
Okay, so a soft pull supposedly does not affect your credit score.
Okay.
Because it's not showing on your credit as an inquiry.
Okay.
Now, I have seen that some of them, even on mine, like, I don't even know why my Capital One pulled my credit, but I go to my credit and look at it and it was pulled. But it didn't affect my credit score. So it had to be a soft pull. So they're just looking at it because now I'm retired. Is she still responsible? Can she still afford to have this credit card? Is what I'm assuming.
Right.
But a soft pull is not supposed to hurt your credit. So that is one good thing. If people want to get pre-qualified, they can ask their lender to do a soft pull. And if they have that ability, they can work on it from there. And I read a lot on the internet about the things that are changing from the last 2 years, because I
Yes.
retired 2 years ago. So there are things that,
I can't believe it's 2 years.
yes, there are things that are changing.
Sure.
But what a lot of the mortgage lenders are saying is, let's send them to our local bank. Let's let them do a soft pull, and they can do a pre-qualification from there. And then when they really decide to buy that house, go ahead and do the hard pull, and
Right.
let's get the true information on here so we know what we're working with.
Sure. Okay, so how much does a hard pull hurt my credit?
It's going to be according to which credit module that they're using.
Okay.
So if, like I said, there are so many. When we were using Kroll Factual Data, and when you get into which credit company you're going to use, you're scrolling down through thousands of repositories. Wow. So it's not going to just be one. Mm-hmm. You may go to one bank in town. They may do the FICO, which if you're going to do a mortgage loan, they probably are. And they're going to pull that score, your 3 scores, and they're going to use the middle of the 3. But as far as how much does it negatively affect your credit score with a hard pull, I'm going to say that it's only going to be a few points. It's not going to be a lot. It's not going to be 10 points. But, of course, another thing that they have stopped doing is if you go from one lender to another within a 30-day range, if you have 3 different mortgage pulls, it only hurts your credit by the one.
Okay.
So it only drops to just a few points.
Okay, that's good to know. Because I know customers that have done that. They've gone to, and when they tell me, I think, oh my, I want them to educate themselves, and I want them to know what each lender can offer. But when they tell me they've been pulled by 3 different banks, I panic inside. So it's not enough to hurt most people.
No,
Okay,
not
great.
within the 30-day range. Now, if they pull it 30 days after the first pull, then you got 2 hits on there.
Okay.
So, and like used to with cars, when you would go to a car dealership and you say, well, get me the lowest interest rate you can. They automatically put that out there to like 6 or 7 different lenders.
Right.
And so they pull your credit. Each one of them pull your credit, and you had a lot lower credit score. They don't do that anymore. So now it's only one pull.
Gotcha. And it takes a minute for that. So that stays on your credit report.
Yes.
And it takes a few years for those hard pulls to come back off. Have you noticed that?
Yes. Well, I'm going to say a hard pull within 6 months, it's starting to, that's really not affecting, and
Does it
within a
hurt
year,
it
it's
anymore?
not
It's
affecting
just-
your credit score that much.
So then what does hurt it is another hard pull.
Yes.
Okay.
Or if you open a new loan. That definitely. So if you open a mortgage loan, that's going to hurt your credit immediately more than anything else because it's mortgage. It's going to lower your credit score. But there's a lot of factors in that. It lowers your credit score because you had a credit pull inquiry. It lowers your credit score because you open new debt.
Right.
Also by the balance on it. So credit scores are generated mainly from the utilization of credit. So if you're high credit, the amount you borrowed is the same as the amount that you owe, it's going to negatively affect your credit score.
For a time.
For a time, yes, until you get it paid down.
Let's start with how I build my credit to begin with.
Okay.
So, I mean, you've really walked along my family through a couple of different things. And so my daughter, when she was building her credit, I said, well, it's time for you to go and talk to Connie. And she'd already been listening to me whenever I would talk to customers. She would hear this, well, Connie says, well, Connie says, well, Connie says. And so when it came time, she goes, well, you said Connie said. And I thought, oh my gosh, I had no idea this kid was like right there. And so then when she was ready and she came in and visited with you, you shared some information with her. So everyone has a different circumstance, but just to get us going on this conversation, at that point she had student loans. I think that was the only credit line that she had. And so you had some instruction for her. So somebody comes in, they have one credit line, whatever it might be. What do you tell them?
Well, okay. And let me just say something that was really funny because we had a show where, and you said, well, let's see what Connie says. So a friends of mine were listening to this. So now, even, what was that, 3 or 4 years ago? So even now, when I'm around them, I say, well, let's see what Connie says. So I'm like, okay, then my face turns red.
I'm sorry, but I'm not sorry.
No, that's funny. But let's just say that someone doesn't have, let's just start from the beginning. I'll just use my granddaughter as an example.
Yes.
So she had gone through 4 years of college, did not have a credit card, did not have any credit, absolutely none. And so she's going to get married. Well, find out that her fiance didn't have any credit either. So I said, okay, here's what we're going to do. So you need a mix of credit. You need to have at least 3 lines of trade on your credit and a mix. So I suggest to people to get 2 credit cards. And of course, if they have no credit, they may have to get a secured credit card, which is not a big deal. So on a secured credit card, you're going to send them $300. They're going to let you charge on that credit card up to $300. Don't ever charge the $300. You never want to charge more than 30% of your credit limit to get the best bang for your buck as far as credit is concerned. So if you have a $300 credit card, every month you want to charge something. I say a tank of gas because everybody's got to have a tank of gas. Wait until you get the statement. And I say that because I had one lady that paid it off as soon as she charged it. Needless to say, that didn't affect her credit. It didn't help her credit. So you have to wait till you get your statement and then you pay it off. And so you do that every month. And then the very key is 12 consecutive months. Mm-hmm. So you're going to see that you're starting to build credit within 6 or 7 months. But when you get to that 12-month history, because that's what the mortgage companies, the lenders want to see is a 12-month history. Are you responsible? Are you disciplined? Can you make that payment every month? So you start out, you need the 3 lines of trade. So you start out with 2 secured credit cards. That's what we did with her. And 1 bank loan. So, of course, she had no credit. So you got to have a cosigner with so you got to have either secured credit or a cosigner to get started. So 2 credit cards and then 1 bank loan for 12 months. So another thing that really benefits people is, let's say you borrow, and a lot of people can't borrow this much money, but let's just say you borrow $3,000, and with a good cosigner, you probably could. And immediately, the first month, pay back $1,500. Now, look at the difference between you owing $3,000 and $1,500 in your first month of having credit. It jumps your credit score dramatically. So now you're probably from a 0, you're probably up into the maybe 560, 580 even. just because of the utilization of credit. Then continue with that $1,500 and make 12 consecutive monthly payments. And if you do that and you don't have any inquiries and you pay all of your payments on time, you will have a good credit score within a year.
I think one of the things that hurts that people hear whenever they hear that their credit is not enough, I think that they immediately think, I'll never get it fixed, or it's going to take so long it won't be helpful. But 1 year is not that long.
It's not, no.
Sometimes I realize that, like, when your eye is on the prize, that it feels like it's forever. But 1 year, especially the older you get, 1 year is fast.
Yes, just like a blink of an eye.
Oh,
it
my
sure
goodness.
is. But let me add one more thing there to that. So while you're doing this, you need to be saving money. If you can't save money, I don't care if it's $20 a week or $20 a month. If you can't save money, you're not going to be able to buy a house. So you've got to have a savings account. If you put that money in your savings every week, every month, you're not even going to miss it. You're going to get used to only having that amount of money in your bank account. Starting credit, let me add one more thing here. I said 2 credit cards and 1 bank loan is what I would prefer. I read on Facebook a lot of times that people put out there about, I started my credit with these little small finance companies. That is a problem. There are many of them in Woodward and, of course, all over the United States. But there are only one that I know of that will set your loan that you get up on 12 payments. Most of them will set them up on 6 to 9 months.
Okay.
That does not help your credit. And then do not refinance. So once you pay that, whatever, I mean, if you borrow $1,000 and you pay $300 or $400 of it down, then you're going to get all kinds of solicitation, not just from them. You get it from your credit cards.
Right.
You get it from everyone. They want you to borrow more money. Do not do that. If you do, you're starting all over again. So if you paid 6 months on that loan and then you refinanced it and you started out with another $1,000, you've got a new loan. So you got a hit on your credit because they pulled your credit. You refinanced, you paid a debt off. Paying it off also affected your credit score, and the new loan affected your credit score. But you've got to make those 12 consecutive payments. So all that solicitation you get in the mail, throw it in the trash. Burn it in the fireplace.
Yeah. And it's amazing how many, as soon as they graduate high school, how many credit card
Offers.
It's crazy.
It is.
The amount they get.
And as soon as you pay something off, I find that as well. Like whenever you get a new loan or if you pay off a loan, I feel like immediately it's like, here, borrow more money.
Right.
And it blows my mind. Whenever I've just borrowed money, I'm like, I can't afford to borrow more money. When I pay something off, I think, I don't want to.
Right.
Like, it feels so free to not, I don't have to worry about that payment anymore. Shoot, buddy. Whatever. You know what I mean?
Right.
I know. I meant savings.
Savings, Kendra, savings. Put that money in savings.
Vacation.
Yeah. you have your vacation fund over here,
Right.
and then you have your savings for
It's not
emergency.
the same, is it?
It's not the same.
It's not the same.
Different.
Man, we should have had her on for budgets too.
Yes.
Because it's really not the same.
No.
Because, and I think that's something that's a hard thing to understand, I think, whenever you're young. Like you think, well, you're saving and then you get the money and then you can spend it. But you're saving for the emergency and then you can spend it. And you won't want to. But that's when it's for.
Right.
Yes. And the vacation is totally separate.
And okay, so one more thing about the credit card.
Brian's going to ask me in a minute if I used my savings to pay for my vacation. I can feel it. No, I did not. I did not. I'm going to Alaska, Connie.
Oh, wow.
Yes. And so I've been not till September, but I'm going to talk about it every day. And so, no, I didn't.
I keep
the
asking,
savings.
so when are you going to Alaska?
He can't wait.
How much do you
Get her
have in
outta
your
here.
emergency fund? Oh, well, yes, because you're going to be lost.
I don't know. I wrote my own contract last night.
You did?
I know. It was
Do
impressive.
you remember how to do it?
I struggled and tripped through a little bit.
well,
But
great.
She hasn't
I've
checked
known
it yet.
for a long time. Everyone's replaceable, Connie.
Oh, yes.
I know this.
Oh, absolutely.
I know this full
yes.
well.
Yes.
Kendra's
Yeah,
not
so-
replaceable.
I just
Let me
always
say one
pray
more
that my
thing about the credit
vacations
card.
remind him. Yes, please do.
Okay. So when you open a credit card, you need to keep that credit card forever. The reason is
Oh.
because of the age of your history that's showing on the credit report. Now, your
yes.
secured credit card, you may not. You may end up closing that and opening a new one after a year because they're going to let you have an unsecured credit card. But keep your credit card forever. So I have a Discover card that I opened in 1987. I still have that. So the credit card date when you opened it can be 30, 40, 50 years old. If you have a mortgage and it's 30 years and you pay it for 30 years and it ends, it stops. So it's going to help your credit for a couple of years, but then it's going to go away. But if you have a credit card that you've opened and you'll have to continue to use it at least once a year or they'll close it out. But continue to use it because I had credit older than that, but I didn't even know that or even it didn't go through my head, I guess, until 1987.
Well, I canceled one just a while back.
And don't close those
1999.
out. Don't close those
And
out.
I closed it. I was so frustrated with them. I said, just shut it off. If you can't do your side right, just shut it off. And they did. And 100 and some points.
There you go. That's
Man.
why.
It took me from an 820 to 6 something. I was like, wow.
So you could have stayed mad at them, but you could have left the credit open.
I'm still happy.
You could have left that credit card open, and you're going to be dealing with different people throughout your lifetime
Yes.
with those people.
Yes.
And I did that one time with a USA credit card.
Yeah.
I did that. Wouldn't lower my credit. They wouldn't lower my interest rate, but I had an offer from another company,
Mm-hmm.
and they would. And so I did close that out. And yes, I saw that it lowered my credit score.
Yeah, mine was,
So
yeah.
I wasn't that mad at those people. I would have left it open had I
I
known
should
that.
have. But I couldn't. They wouldn't listen to me. So now I'm sure I affected their business.
And now you
did
know
not.
redhead
And
Brian.
don't stab yourself in the back just because you get mad at someone.
So there they are.
Never burn your bridges.
Yep. Nope. I burnt that one.
So we have, this is like wisdom with Connie this
Yeah.
morning.
Yes. Yes.
So get my ruler out and
Yes.
hit
No
you on the
burning
knuckles,
bridges.
you know,
Got it.
like they
Got it.
did when I was in typing. So many, many, many years ago.
I love it. Okay, we've only got just about another minute left. I think
Okay.
that we are going, do we have enough that we can come back and talk again for a whole other show?
I
think that we do.
Probably, well, yes, because we still have a lot to talk about.
Okay, awesome.
We haven't even talked about repairing credits.
Sweet. Well, then we're going to do this again because we really appreciate whenever you join us. We do miss you, but we are thrilled with your retirement. What's your favorite place that you've been so far since you've retired? You've been a million places, but
I have been to a lot. Of course, we took a cruise to Alaska that in 2018 before I retired.
Right.
That's my favorite trip.
Okay.
But the first in January after I retired, the end of December, we went to South Padre Island and we stayed there for a week.
yes.
But we stayed a week at different places along the way. And so that's probably one. Well, there's so many though. The one to Glacier National Park in Yellowstone.
oh
and Banff,
gosh, yes.
that was pretty awesome too. So they're all awesome. I love to travel.
Do you RV with every one of these?
We did with those, yes. Well, of course, the one to Alaska we didn't, but yes, we do a lot of RVing.
Love it. Okay, we're going to talk more. All right, that was the Brian and Kendra Show. I'm Kendra Brown, 580-216-0090.
Brian Cook, 580-334-2303.
Thank you. We'll see you next time.